If you're a real estate agent working with buyers, in today's market, your buyers aren't just competing with other families. They're up against cash investors, escalation clauses, and waived contingencies. I'm Ella Gurfinkel, and after helping over 2,000 families secure homes in hot markets, I'm sharing the 5 financing tactics that actually work to win bidding wars without your clients overpaying or taking dangerous risks. Let's talk about how team effort can get your buyer in a competing situation to get selected as the winner against other multiple bids. All of us know that standard pre-approvals are basically worthless in the bidding war. Here is what we do different. We can complete full underwriting upfront with a TBD property address. Or better yet, we can actually provide a cash guarantee with our pre-approvals. This means that your buyer is essentially approved, not just pre-approved, and with a cash guarantee, and all they need is a property that appraises. Effectively, it helps you compete against cash offers. Include this language in your offer. Buyer's financing has received preliminary underwriting approval, pending only property appraisal. The listing agents know what this means. Your deal won't fall apart. A cash guarantee equates your buyer's offer to basically a cash offer, where Fairway will guarantee that either we buy the property if the financing falls through, or we'll pay the seller $10,000 for not following through on our commitment to finance the buyer. Another thing to consider is appraisal gap guarantees. Do they protect the buyer? Question mark. Instead of waiving the appraisal contingency completely, structure a capped appraisal gap guarantee. Here is an example of what you could say. Buyer agrees to cover any appraisal shortfall up to X amount of dollars with proof of funds attached. The key is setting the right cap. I've heard as much as 5% of the purchase price maximum being recommended, and having the cash reserve documented upfront. Will that set your buyers apart from everybody else? Potentially, yes. And no, I'm not telling you how to do your job. Now, here is something else to consider as another strategy, the 2-1 buydown strategy. A 2-1 buydown lets your buyer get a rate that's 2% lower in year 1, 1% lower in year 2, and then returns to the note rate. The beauty is the seller can pay for this through concessions. And here's the calculator that shows exactly how much this costs and saves. For a $400,000 loan at 7%, a 2-1 buydown costs about $8,000, but saves your buyer $335 per month in year 1 and $170 in year 2. Now, include this in your offer to show sellers you're serious. Buyer requests seller credit of X amount of dollars for the 2-1 temporary buydown, resulting in lower payment and higher qualification amount. Close faster than your competitors. We can close in as little as 15 days. 21 days is totally normal without rush fees by using our parallel processing system. This means ordering appraisal on day 1 and having underwriting review the file before all the documents are in. Specify the quick close in your offer. Lender has confirmed, let's say 18-day close capability with no additional fees to either party. Here is another option, the non-contingent financing with safety nets instead of waiving financing contingencies completely. We can use this hybrid approach. Financing contingency limited to 7 days for preliminary approval only, with earnest money becoming non-refundable thereafter, except for appraisal or title issues. This gives sellers the confidence of a nearly non-contingent offer, while still protecting your buyer from major issues. Now, which one of these 5 strategies would help your current buyers the most? I would love to see your comments below, or send me a DM with your situation and I'll send you the specific language to include in your next offer. And if you're working with a buyer right now who's lost out on multiple offers, book a 15-minute strategy call with me. The link is in the description, and let's get them into a home without breaking their budget.